Okay, so before it gets any darker, we're going to be talking about Atlassian. A lot of people have been saying that Atlassian looks like really good value at the moment, and it is. Atlassian had a really good run after they IPO'd for a few years up until the height of the pandemic and the tech bubble craze, then crashed somewhat. And if you look at it on a ratio basis, they are looking really good value at the moment, just 7 times forward sales, 25 times forward free cash flow, and that's basically the lowest ever. This Australian darling in this beautiful country has made Mike Cannon-Brookes and Scott Farquhar some of the richest people in Australia. 25 forward times free cash flow is pretty cheap. It got to that level sort of in August of 2024. That's when I made my first video on Atlassian and went long on the company then. The share price then did really well. Now they're back at 25 times forwards, and they've just grown 19.7% on revenue, a similar level on free cash flow. Their free cash flow margins have been pretty consistent and pretty high for a long time. So 19.7% they just grew for the full year on revenue, and their guidance was 18% year-on-year revenue growth. So on the surface, that looks very good value for money, doesn't it? In terms of the stock and for the investment overall. Now, let's talk about Atlassian a little bit. So they have a whole host of products, and this actually goes into one criticism of Atlassian overall, is that there's not a lot of color that they give you when you're looking at the shareholder letters. I mean, yeah, they break down revenue by cloud and data center, but it doesn't really tell you a lot because they have a few different products. And what I really want to see as an investor, mosquitoes are out already. What I really want to see as an investor is how much are each of these products growing. So Jira is obviously their flagship product. And that's kind of similar to GitLab. They're not as complete in the DevOps lifecycle as something like GitLab, of course GitHub as well, which is owned by Microsoft and actually the larger of the two, the market leader within the space. Jira is project tracking management for the code, and in most cases, Jira integrates very well with GitLab or GitHub, and they've also got the Bitbucket tool, which in most cases is more of a complement to the two as well, which is important because the overall DevOps market is growing at about 18 to 20%. That's what it's forecasted to grow up until the next few years, and obviously that's in line with the extortionate growth that Microsoft are talking about with GitHub, and also for GitLab, they're forecasting 24.1% revenue growth for the next full year. It might be 24.3, but it's pretty good, right? And GitLab just grew, I think, 27% in the most recent quarter. So it's a good organic growth industry to be in. Another of Atlassian's products is Confluence. That's kind of similar to Notion. So it's kind of a central hub, a database for all of their knowledge, get everything in one place. I know that there's a lot of competition in that industry. I think it's still growing, although much slower than DevOps. It's kind of like a Notion for enterprise. So they've got that, and they've also got Trello, which is a project management tool, less technical, so not so much on the DevOps side, but also deeply embedded, and sometimes that goes hand in hand with Confluence and everything works together. So that's a bit similar to a Monday. This project management market's also growing very nicely organically, double-digit revenue growth at minimum. However, it seems like this product is not as broad as Monday. I know I'm going on a bit, but I just wanted to give an overview of the main products that Atlassian encompasses and what industries we're looking at here within the software as a service space. The last one, Jira Service Management. This is Atlassian's one of their fastest growing products. Again, it'd be nice to have the actual quantitative numbers in front of me, and I don't have that as a public investor, but that's in the IT service management market. So they're basically trying to go after ServiceNow's market. You look at ServiceNow, they're forecasting 20% revenue growth and has been growing in the low 20s for some time. So exposure to that, exposure to a project management market like a Monday or a Smartsheet. They've been growing double-digit revenue, and Monday is growing in the high 20% range. GitLab's growing in the mid 20% range. GitHub's probably growing faster than that. And Atlassian are this software behemoth that kind of are in all of these spaces. So very, very, very nice exposure there. And as I said, when you look at it, it's like, oh, the lowest price to free cash flow of all time. Just grown 19.7, forecasting 18. By the way, last year, for the year that they've just reported 19.7, they initially guided for 16. So they typically don't up their guidance throughout the year, but the initial guidance that they release on the full year, and Atlassian actually just had its full year, so they report its full year in August in the summer. They actually ups that massive. Like, to go from 16% forecast to 19.7 is very big. And the rate of growth of Atlassian's turnover is not really slowing down that much. That's what I like about Atlassian. You're getting very, very, very consistent revenue growth. And this 18% year-on-year growth for a company that's already doing 5 to 6 billion in annual revenue is significant. And as I said, all of the main opportunities that they're in are growing quite nicely. I tried to check for end of 2023. They didn't give overall revenue guidance there. It was kind of messy with their cloud and non-cloud. They didn't give overall revenue guidance for that. 25 times forward free cash flow, as I said, that's the basis of the thesis, is that Atlassian are trading at really good risk reward. Oh, thank you. Some lights have just come on automatically. Okay, so another thing about Atlassian is I mentioned GitLab and Monday, and I think that they are much higher specialities within their niches. However, Atlassian, because they have the scale, because they have a huge existing customer base, this has allowed a culture historically to spend much less on sales and marketing. GitLab and Monday are still in that acquire phase. Obviously, they're much smaller companies as well. So they're having to spend so much on sales and marketing. Atlassian can do much less, and they spend 51% of their R&D, 51% of their revenue on R&D as it currently stands. So they've been doing that consistently. So in theory, they've got a lot of money to translate into consistently improving their products. And from what I hear for Jira Service Management, it's a very good IT tracking tool to basically troubleshoot any errors. It's a very essential part of tech. Obviously, ServiceNow are very good at that as well. They've both got 4.3 stars on G2.com, so similar, but obviously ServiceNow are a massive, massive market. But I mean, they've got probably double the revenue of Atlassian and still growing 20%. So on the one hand, it's like a negative that Atlassian is competing with all of these amazing companies. On the other hand, it's showing that the overall industry is pretty good. And of course, Atlassian's numbers are not lying. As I said, the big risk is probably that, yeah, they are going after certain industries where there are very good companies in there. However, the flip side of that is Atlassian is organically growing very fast. And in some cases, for example, probably in DevOps the most, Atlassian is more of a complement to that. Although I would say that because GitLab is complete DevOps lifecycle, GitLab probably has more of an opportunity to disrupt Atlassian than vice versa. So that's all very positive. And of course, with all of these products come massive switching costs. There is network effect, but the big one is switching costs. Imagine all of the data, all of the people using those softwares that are familiar with it. And that's 300,000 customers that Atlassian have got. It is a pain to switch from one to the other. And I think that that's why Atlassian have been able to keep this growth sustained. I actually don't necessarily think that it's because Atlassian are rolling out the best products in the world, although I think that they are continuously improving them. It's because of that stickiness. So, I mean, one other thing to note is the SBC as a percentage of revenue is extremely high. Even for fast-growing software companies, it's quite extortionate. For example, it's the highest in the NASDAQ 100 at 26% of revenue. So that's a lot. On the flip side, you say, oh, they can afford to do that because their sales and marketing percentage of revenue is low. And if you look at their WASDO, their weighted average share diluted outstanding growth, that's only 1% a year. So it's not like they're diluting shareholders a lot. 1% a year dilution is not much when you compare it to 18% revenue growth forecasted and likely free cash flow as well if they retain the same sort of margins. The last thing I wanted to say is it was this time last year that Scott Farquhar left the company. Of course, he said that this was a good time for Atlassian, and judging by the stats and the numbers, it looks like it was. He said he wanted to spend more time with his young family and focus on philanthropic adventures. However, it obviously then begs the question, Mike Cannon-Brookes and Scott Farquhar, university buddies, they've obviously been running this company for, I think, 20 years. And for him to go, it obviously then is down to Mike Cannon-Brookes to carry on the show. And from what I see of Mike Cannon-Brookes, there are some things in his character which I would say are not necessarily to my liking. He doesn't actually come across as the most likable guy. He's very direct. I think the main thing that bugs a lot of people about him is he does a lot of lecturing on climate change, and he's got a private jet, and he has a massive sponsorship for F1. So of course you can see contradictions coming in there, and people don't like being told what to do when their carbon emissions are a fraction of what those activities would be. However, at the same time, this kind of no-nonsense, cutthroat approach, it has worked for a lot of CEOs in the past. The Glassdoor reviews for Atlassian are a little bit lower than I would like to see, and a little bit lower for some of their competitors, lower than the big tech guys, lower than Monday.com, which I'm obviously looking at for Trello comparison, and GitLab for sort of Bitbucket and Jira comparison. So that's obviously one key risk, is that maybe these two balance each other out. I know they're both very technical people, but I think Scott Farquhar came across as the slightly more introverted thinker. Mike Cannon-Brookes is probably a bit more brash, a bit more executive in his leadership role. However, you can't knock the guy because of what they've built. And what you've got with Atlassian is you've got evidence of, okay, Mike Cannon-Brookes has been able to do this for all of his time, and Atlassian have just posted an 18 forecasted revenue growth turnover number. And if they hit that, these shares are very cheap in greenfield industries. And they may exceed that, because last year they forecasted for 16% and they ended up growing 19.7. So it's an interesting toss-up with Atlassian. It really, really is. I would do a more technical video if I had better access to the numbers, and that's one of my criticisms. I mentioned it last year, is that we actually, of course, yeah, it's useful to know that more of your customers are migrating to Atlassian Cloud rather than on-premise, but we would really, really like to know from all of your different software suites, how fast is it growing and what? The one thing I do break down is Marketplace, where people can build their own tools and sell them. So it's kind of like an e-commerce software space, but that's quite a small part of revenue and is also growing slower than that 18% clip. So I better go. I just wanted to share my thoughts on Atlassian. It's getting dark, but yeah, I just wanted to share my thoughts. On the whole, I mean, it's already in the NASDAQ 100. They've got good growth opportunities ahead. And I think that given that, number one, the past revenue growth trajectory not slowing down a lot, they didn't have much of a post-COVID slump compared to a lot of the software names. If you look at Workday, and if you look at Datadog, for example, or Monday, a lot of software companies went from this hyper-growth 60, 50% all the way down to between 20 and 30. And Atlassian was one of the best companies for their revenue growth trajectory to not slow down that much. And if you've seen a lot of my videos, you'll know that that's something that I really like. Anyway, just wanted to share my thoughts. I wish you all a wonderful rest of your day, and I look forward to catching you in the next video.